Well, good afternoon, Maverick traders. Joe with you here. It's a Monday, the 14th of July. Let's get into a market roundup. You guys know how this works, so just make sure you're following along and take responsibility. I'm going to take a look at the meaningful news of the day. Let's break some things down technically, and I've got a couple of trades, so let's go ahead and share those.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Moving into the market analysis, you'll see that we just basically had a carryover from last week. More consolidation, more optimism, and we're just basing at these highs. Daily news-wise, let's take a look at it. So the markets do put in a flat day. We'll see where that goes. It's early in the week. We are getting into earnings season. I'll mention that again later on. But there's just not a lot of conviction when it comes to selling. Also, the volume is light. Let's take a look at the chart here in a second. But the S&P and the NASDAQ, they're testing these new highs. In fact, I think the NASDAQ tested it intraday today. We'll see where it goes. But it's not a massive surge. It's not a big influx. Folks, keep in mind we are still in summer. The volume's going to be light. And some of these things that just continue floating higher, they might. It just depends if sentiment stays optimistic. So how do we finish? Pretty much flat. I mean, the Q's put in just over 0.25%. The Russells actually did the most. I mean, 0.69. But the Dow and the S&P, I mean, it's a flat day, but it was never really tested. It wasn't volatile. It wasn't a huge surge up and a huge surge down. It was just a nice, meandering, slow, sideways day. Taking a look at oil and gold, I know that oil's got its own problems, and it has for quite some time. In fact, down over 2%. And then the slide in gold, understandable because we're seeing massive moves in Bitcoin. We've seen in the cryptos in general. A big push in the U.S. markets over the last month. So optimism is definitely prevalent, but I don't think it's this mad dash or slash surge. We'll have to keep an eye on that volume. Let's take a look at the advanced decline line. You'll see 58% advancing, 38% declining. Also 76% above the 50-day, 24% below on that measure. So 3/4 of stocks are kind of outperforming the last few months, and they should. I mean, it's been a pretty slow, steady grind to the upside. So let's take a look at the chart and see if we can't do much with it, and we can't. We had a really good move to the upside once we broke above those highs, and we had a couple of days here that I thought were pretty interesting, although I didn't see too much participation in the volume. Since then, it's kind of been very quiet, not a lot of worries. Now, we have had some very interesting tariff changes. I think the markets are actually starting to get used to this. So I'm not seeing, at least sentiment-wise, when it comes to the investor, I don't think they have a problem. Well, obviously, they don't have a problem putting money to work here. But it isn't a massive amount. I want you guys to see that. Summers are usually slow. They tend to kind of bleed higher. So I guess the next thing to see if we can rattle a cage or create any sort of like corrective action will be as we get into earnings season, which is actually ramping up this week. Let's take a look at the Qs. It's the exact same thing, just this high base, nice breakout that I had a little while ago. Consolidating, not sure where to go next, but I'll lean it again, folks. Look at this volume, just a little bit lower. It's sliding off. The investor's not worried putting money to work, not a ton, but it is just enough to actually get things to kind of consolidate and move sideways, and we'll see what happens once we get into earnings. I think it's going to be pretty interesting to see what happens. All right, so let's take a look at the heat map. Not everything participates in every day. Look at Microsoft, NVIDIA, a couple of these things are down, but they're not falling apart. You have an up day, down day, but the overall trends kind of stay intact. The outperformers are definitely the communication services, and the underperformer is the consumer defensive. It has been for a while, but there are strong stocks and weak stocks in both. So keep your focus on the trend of the stock you've selected and kind of stick with it. Our outlook hasn't changed. I'm going to keep it as a +1. I like that the high base up here is why I'm going to calm it down from a +2 down to a +1. We could see more consolidation, maybe even a slight pullback. We'll see where we go in the next little bit, but it is taking a break here. But it is a very optimistic break. So monthly outlook's going to remain at a +3. Money seems to keep coming in, and it's coming into some of the places that you've seen. It's also going out of the places you've seen. So not a lot has changed. Let's take a look at the trades here, and I decided to go across the boards. I just went straight up to communication services and technology, and then on the bear side, I went straight down to consumer defensive materials. I looked at some healthcare, and I found some pretty good trades that have been in those trends for quite some time. So Amazon, Google, Roblox, all great. Let's take a look at Google first. I've got Google here. It's just this ascending triangle pattern, money being put to work. Now, these are going to start getting closer to their earnings, so please, folks, start checking earnings on these. But I just like the turnaround that it's had. Moving averages switched, flipped. We've got an ascending triangle pattern. Looks like we're leaking above it. Folks, take a look at this volume here. It is light. It's low. Now, we do get interval spikes here and there, but other than that, it's going to be spotty because we are in kind of the summer. Now, going into earnings, we'll see where this goes. So be aware that these do have earnings. Now, on the bear side, I decided we could take a look at DEC. Just like most of the defensive ticker symbols that I have in my watch list at the downside, it's a continuation of a trend that's been in for quite some time. This is nothing new. This has been falling apart, a little bit of a hiccup, maybe an oversold bounce or a short cover rally, another gap down on an event or some sort of an announcement, and this is just out of favor. What I like about it is what it's doing now. So I've got a support level here that it looks like it's leaking through. Increase in the volume. This might be a gap down tomorrow, or it might slide a little bit more. But once again, it does have earnings coming up at some point. But these charts are just kind of the charts that I like to show. So what do I got, guys? Well, bullish sentiment remains as we continue to see consolidation at these current highs. I do think that tariff impact that started back in back at the beginning of the year is kind of just wearing itself out. There's always a negotiation or an exception or kick the can down the road. And I think there's some confidence coming into, at least sentiment-wise, there's confidence of some traders putting money to work here. A couple things to look at, and we'll talk about it when we get there, is capitulation and or blow-off tops. When you get a big surge to the upside with a bunch of volume, chances are that might be that last-ditch effort, and we're going to see a correction. But until we see that, if we get this slow bleed, it can continue for as long as it wants to. We do have some economic reports coming up, CPI and Empire State Manufacturing out tomorrow. We will have the PPI, jobless claims, retail sales. You guys can read them, all coming out. I don't know how much they're going to impact. They've actually been pretty much in line. The expectations for the CPI was a little higher. So we'll see when that comes out and how the markets take it. Earnings season is upon us, so we'll see what happens. In fact, folks, take a look at these banks: JP Morgan, Wells Fargo, Citibank. We got the Bank of Mellon in there, BlackRock. So those are all due out tomorrow morning. Now, if you take a look at these charts, they're already optimistic. Some of them look really good for a buy. In fact, I think Bank of Mellon actually is breaking out above resistance. So did we miss it? No, but there's anticipation to the bull side here. We'll see what sentiment does with those numbers once they come out. That's going to be the most important. Regardless of what the numbers are, the projections, it really is what these markets in this state want to do with some of those announcements. Thanks for joining me. We'll talk to you next time. Bye, everybody.